right, we got prediction markets, counter program with regulation. I think we're the fun panel, I think. Guys, it's so great to be back here. I think this is a topic everyone's talking about. How many people here have placed a bet on a prediction market or sports betting app in the last week? Okay, yeah, a lot of you. Well, we're really here to talk about how prediction markets are bleeding into fintech, to crypto, traditional finance. It's really becoming the everything market. All of these experiences are sort of merging in one another. And so I'm really excited to have our panelists here today. Different leaders and executives who are building in different components of this space. I think the big takeaway here is we want to help you guys understand what exactly we mean when we're talking about prediction markets, but also how they're infiltrating all of fintech and what that means for you. So I want to welcome our panelists. To my left, we have Robert Pryor, CEO of ForecastX. And then we have Robin Hanson, a professor at George Mason University, straight off the train. We have Jason Trost, founder and CEO of SmartGets. And we have Michael Zola, GM North America at TradingView. So a lot of great perspectives here. Guys, I want to get right into the questions, but maybe before each of you kind of speak, maybe you could give a quick 30-second who you are and what you're building before you answer the question. That way people have the context. But let's get going and let's set the stage here. I want to start with you, Jason, because you're building actively in this space. Let's frame up what we mean by prediction markets. So I think we've seen the Kelshi ads, the Polymarket ads. We've seen Robinhood building in this space. What is a prediction market? The easiest definition. How does it work? Who participates? And what kind of events are people trading on currently?
Well, I would define prediction markets as binary options that are around a real-world event. So it could be sports, it could be a political election. These will trade between 0-1 or 0 and 100% or 0 and $1 if you like. But basically, it's a zero-sum binary option. The way to think about it very quickly is the value of the bet or the value of the trade is the buyer side plus the seller side equals the binary option, and the ratio between the buyer side and the seller side are the odds or the price, if you like. And the people that are normally trading on this are retail customers, although more and more institutions are starting to trade these things.
And real quick for the audience, tell us a little bit about SmartGets.
SmartGets is one of Europe's largest prediction markets. We've been around since 2008, and we're expanding into the US with a CFTC license.
2008. Wow.
OG.
Okay. You're OGs. All right. Robin, I want to kick it over to you because you're bringing sort of this academic research lens, and you were really one of the earlier voices predicting that markets would sort of serve as these systems of learning. How close are we? I mean, from when you started researching this topic, tell us a little bit how it's evolved, where it is today versus when you first started following these types of experiences.
It was 36 years ago, as a much younger person, that I first started writing about prediction markets. We didn't use that name back then. And I was just one of the first people to say, you could do a lot with this, not just a lot of fun bets, but there's a lot of social value and social institutional changes that could be built out of more prediction markets. And since then, there's been long stretches of nothing happening, but then there are these bursts of activity, and this is one of those periods of bursts of activity, which gives me hope. But we've done a lot more now than we did 10 years ago, say, but we could do vastly more. And my big question is, how far are we going to go?
Tell us a little bit about what you mean by what we can be leveraging these insights for. I'm sure there's kind of societal, cultural applications, and then there's applications for traders and investors that we'll get into. But what are some of the signals that can be gleaned from following these markets?
Standard decision theory says to maximize your expected value when you have a decision. That means you need to know what you want. Utilities, you need to know what you think is likely, given different actions, that's the probabilities. Prediction markets can give you probabilities. Whatever decision you have in front of you, you could make a prediction market about that decision. And if you can induce people to trade, get information directly relevant for your particular decision. And that's things that everybody could do, is students trying to decide which college to go to, people trying to decide who to marry, companies trying to make big organizational decisions. They're all, in principle, amenable to setting up a market to give you more information, more accurate estimates that then helps you make better decisions.
All right, let's bring this back to the world of fintech. And Robert, I want to talk to you about sort of how these things are structured. ForecastX, quickly tell us a little bit about ForecastX, and then I want to talk about what you've learned about sort of building within compliance in a regulated space within this world. It's an emerging piece of finance, but you've built around it. So tell us a little bit about ForecastX, and tell us about what the regulatory landscape looks like today.
Thanks, Katie. So ForecastX is a CFTC regulated swaps exchange. And I guess I would add on to what Jason was saying, not all contracts trade the same way. On our exchange, they are what's called buy only. So that's no novation. That means the exchange is on the other side of every trade. Not like a market maker, the exchange is not taking risk, but the guaranteed of the contract counterparty is the exchange itself. Having said that, so we have a DCM and a DCO license. That's a trading and a clearing license from the CFTC. Had that since last August. So, and our first popular contract was the presidential election contract. And then since then, so we've been expanding the exchange into other topics, economics, climate, and as well as political, and type things like, will the average global temperature be 1.25 degrees higher than pre-industrial levels by 2045? So we have very long-term contracts as well as short-term contracts, which you see around there. What we've learned, essentially running the exchanges, it's very similar to any other exchange. The basic supply, having been a broker and a market maker for many, many years, the first thing you learn is your obligations running an exchange or participating on the exchange is twofold. One is protect the customer order, and maintain a fair and orderly market. Sounds obvious, but that's the mantra of all exchanges, and that's relevant for today's markets as well.
Yeah. And what is the general tenor of the regulatory environment right now? I know you've worked globally and here in the US. When you look at the crypto stuff, it's becoming more proactive about giving clear boundaries versus just kind of slapping wrists. Is that mentality sort of coming across over into prediction markets as well, or do you think the regulatory bodies are still a little apprehensive about being proactive?
Well, the rules are quite clear and prescriptive, and that's helpful. Except for the actual contracts themselves, the topics and whatnot. You have there's a bit of a, well, it's not so clear the difference between a security-based swap and a CFTC swap. That needs to be cleared up, and that will allow for, I know we're going to talk about it later, but allow for things like earnings contracts and things like that.
Yeah, earnings is one that I think a lot of investors are curious about, because typically you could play that game with options, or you could do the binary, right? I mean, they're going to beat earnings, they're not going to beat earnings. Michael, I want to go over to you because TradingView, I think everyone here has probably used TradingView. You guys are sort of one of the leading sort of charting and analysis softwares out there. I'm curious from a user experience, the way people interface with this data, with these experiences. What have you all learned over time, and how do users behave when they're engaging with prediction markets that might impact or give us insight into other fintech experiences?
Yeah, thanks, Katie. I think at our core, we have kind of crossed a journey where we span beyond a platform for people to evaluate and analyze charts. We've kind of grown into this network of 100 million plus users that come to evaluate, test, and analyze their beliefs on the future. And subsequently they can express those views in the future. So from our perspective, the UX, there's a social intelligence behind this phenomenon that's building, and there's an interesting kind of dichotomy forming where data is synthesized into information and becomes knowledge through this social engine in this feedback loop. And we see the behavior before it's expressed in the markets, which is pretty interesting. So I think that there's a great potential to aggregate. It's, we become an aggregator, a synthesizer of data inputs. And there's a correlation between engagement and the socialization and interaction with the data. So we get to evaluate that on our platform. And, we integrate, 300 plus different data providers, brokers, and there's an earnest trend forming that I would say it's prescient. So the behaviors that shape these express views are quite telling. So there's some interesting signals to be learned there.
Fascinating stuff. And Jason, I want to go to you. I mean, I didn't know before just now, 2008. So what is, in terms of the user experience or how people are engaging with SmartGets, what have been some of the biggest evolutions over the past few years from kind of how you concepted this to what it's like today?
Well, I think when I started, my motivation for getting into this came from in-trade trade sports, which were OGs before I set up my company. And I was fascinated by the presidential election market because I'm a political junkie. And I noticed very quickly that you could watch this real-time market and go from trying to synthesize all these newspaper articles to just having one number on the screen. I thought, holy cow, this is such a powerful idea. So when I founded SmartGets, I kind of had this idealistic, more towards an academic point of view of Robin Hanson of like, there's so much power that you can get out of this. And I think the realities of running an actual prediction market is you realize a lot of the actual volume comes from sports. So that's probably my biggest lesson is that while, that expression drive for show, putt for dough, it's a little bit like that with prediction markets where politics are the driving and the putting is the sports. So you make all your money in sports, but the fun stuff to talk about on CNBC is the politics. So that's been one of my biggest lessons. Also, people love horse racing in the UK. That blew me away. There's 50 horse races a day in the UK. You're like, how can people like horse racing this much? There's probably an equivalent number in the US as well. It's just an insanely...
And cricket too, right?
And cricket, yeah.
I got an Italian grandpa that used to take me to off-track betting. My mom did not like that, but yeah, people like the horse racing. I think the sports angle is interesting because it almost feels like the way fintech experiences are now. Everything almost feels a little more like sports and like the real-time nature you can engage. You have companies like Robinhood doing their earnings call with like the step and repeat behind them that looks like a press conference. So it's starting to feel all sort of similar when you put them together. Jason, sticking with you real quick, we were talking about sort of regulatory appetite, US, UK, Europe. I recently learned that sports betting in Europe has been around for like hundreds of years. And so would you say the UK and Europe's kind of ahead of the game in terms of the regulatory environment around these things, or is the US catching up?
Yeah, I would say from a sports betting lens, the UK is probably the best in the world at this. It's very integrated into their culture. The Gambling Commission takes things very seriously. There's really tight partnerships between sports leagues and betting providers. I know that's quite topical in the US now with the betting scandals that are kind of coming to the light. But betting has been around not for hundreds of years, thousands of years. It's something that's ingrained in our culture. This idea of trying to risk on the future is part of our DNA somehow. And I think Europe has been, I would say, less moralizing when it comes to sports betting, which is might feel backwards from an American perspective, but we kind of have quite a Puritan view with a lot of these things that are starting to melt away. But when I was a kid, you could bet in Atlantic City and Las Vegas, and now it's in your phone everywhere. So we're kind of getting over this moralistic lens of sports betting, and Europe has gotten rid of that a long time ago, and I think they have a very good approach to it.
Yeah. And if someone could let me know how we're doing for time from the team, because the clock is That would be awesome. Or just tell us if we're going over. The clock is not set, so we could just go all day on this topic. Michael, let's talk about. I mean, a lot of people here are watching prediction markets from the seat they're in, maybe as a user. Maybe they're curious how it impacts the companies they're building. What do you think? What do you think about the integration between traditional brokers and fintechs and these sort of platforms and experiences? What benefits are there to that? And then what potential challenges could exist by fusing these worlds together, as we've seen in places like Robinhood and elsewhere?
Yeah, I'd say trading views as kind of nascent stages in forming our posturing in this market. I think there's a sincere and earnest effort to be conservative and well-informed. We are a confluence of, right now, I think 130 different brokers are integrated with us. So we're self-governing in a pretty important way. The question is, how do we think about
things to consider, people building in this space as the worlds come together? And this is really for anyone. Like, what are some considerations? I'm thinking almost in terms of the mindset of users now. We were talking about before, you might have, prop bets on an NFL game, and then the next day you might be buying, fixed income on Webull, as we heard from Anthony. And so if you're building in that space, I guess considerations of like where the mindset is currently, and it could be for anyone. I was curious how you think about that, because it's not a monolithic sort of thing where people are all either degenerately gambling or doing prediction markets or doing long-term investing. It's all the same. And I'm curious for our audience, like building in that space, what does that mean for building a company in fintech as it is today?
Yeah, right now, for us, the data comes first before we think about trading. So we're really focused on, creating where there's a predictive market, we want to be the interface. What role we play, I think analytics, visualization is really important. I think the educational process, we're a platform where there's an earnest attempt to be thought leaders in how we educate our users to ensure that they're making informed decisions. So foundationally, we're focusing on data and analytics, as potentially the trend goes and there's volume. Derivative markets, is kind of a secondary consideration, but data first.
Just to jump in there, I think it's no question we're in the middle of a hype cycle. What's going on now, and it's pretty wild to watch. But there's a lot of lessons that we can learn from Europe, because Europe's been doing this for 20, 30 years. So this is nothing new over there. I think one of the things that's not really getting talked about right now, and I get that because it's all very new, is this idea of taste around markets. I think there's a lot of markets that are distasteful. So like how long a president is going to shake hands, it might, it's going to get a lot of clicks on X, and it's kind of fun to talk about, but there's no utility in it. And I think it serves to muddy the water between the idea of a serious trading market with something that's quite silly, in my opinion. And I think a lot of the people who are out there right now are showing, putting up the wrong kind of markets and promoting the wrong kind of markets. And I think that's really important as we're thinking about maturing this industry to what markets you put up are as important as the sanctity of the marketplace itself.
Yeah. Let's talk about the silliness of some of the bets, because they also seem to be the most, from the outside, manipulable. Because we talked about the Coinbase earnings call. I want to get all of your take on this. I don't know if anyone caught what happened at the end of the recent Coinbase earnings call, but essentially Brian Armstrong at the end of the call started rattling off words that were being bet on in the prediction markets that he was going to say on the call. So he just started listing the words based on, and so he manifested that to happen. And so you can see how some of these, the handshake, some of these more surface level bets are actually could be easily manipulated by people who are involved. So I'm curious, and I'll start with you, Robert. What do you make of that when the people in the position to sort of influence these outcomes start to actively become a part of that story?
Well, it's both the best example and the worst example of a contract, I guess I'd say. You know, when you list a contract, and as Jason was saying, it's important to, you know, choose your topics, and how you phrase the questions. That particular one had no context written around it, so of course it was just an accident waiting to happen. And but I'm just going to keep a lot of compliance people busy for a long time. I guarantee that.
What about you, Rob? I mean, to me, this is fascinating. I mean, this is getting more into the societal implications, but I do think about these things. At what point do people start to actively become a part of the bet they're placing? And what does that mean for sort of prediction markets overall? What did you make of that moment with Coinbase?
I think there's a key branding question here and people trying to differentiate what side of this product market they're on. Clearly, there's an appetite for just fun here, and those things were fun, and people saw them as fun, and the fact they could be manipulated was exactly a key part of the fun, as well as, you know, who's going to throw what on the basketball court, et cetera, like that. So I'm not against fun per se, but clearly that kind of fun is different than other sorts of branding of financial markets, and regulators and, you know, suppliers, et cetera, are going to have to make a choice. Do they brand these the same? Do they give them different labels and different screens? Do they have different rules? I mean, a lot of financial markets are really eager to show how serious they are and how they wouldn't ever want anybody to manipulate things, and there's never anything like that they would ever tolerate, and all the stuff they do is really important and really essential for the world economy on the one side, and then other people just want to have fun betting on cool stuff they can all look at and talk about together. And that's exactly an example of that. And so the question is, are we going to allow all this stuff to just mix undifferentiated? Are we going to draw lines? I mean, how are we going to decide? Because look, another key issue a lot of people have in the background is there may well be a retrenchment, a backlash. And if so, where will that cut belong? Which things will get cut out and thrown back, and which things will stay? And that will probably depend on which side of some branding line things sit on. So I think it's important for people to be thinking about how to differentiate, what sort of categories to make in this space. At the moment, all these things are allowed and they're all happening, but, you know, there's a worry about retrenchment. And even if there isn't, how do you position yourself as a firm with respect to these different kind of products? How is fun okay on your site? Is frivolity okay on your site? Is it a different place on your site you go for the frivolous stuff? I mean, how we present this?
I'm curious what you think based on just your knowledge of the space in research. What would it take to have the backlash that would set us back? Would it be a massive scandal, fraud? Like what kind of, what do you think would have to happen for that to get kicked back?
I don't have a slide to show you at the moment, but a few days ago, I asked ChatGPT to help me make a graph of rise and fall of legalization of gambling of various sorts in 10 different regions over the world over the last 3 centuries. And there's just basically very long scale cycles. Basically, you know, things are lots legal and then lots illegal and back and forth all over the world, not all synchronized, but there's just long-term cycles there. And a thing you might not realize is pretty much all your familiar financial products like stocks, commodities, insurance, were all once somewhere illegal as gambling. So one of the things that happens in these cycles is new things get tried out, and then in the next retrenchment, those things don't get squashed, but people say, no, that's not gambling, that's useful. And I'm hoping that we can, in this cycle, get more things like that, things tried that we decide, oh, that's useful, and then the retrenchment we go, well, we don't want to squash that, we want to keep that.
And I think it comes back more to the definition of manipulation. I mean, was that manipulation? He had no skin in the game, you know, presumably he didn't even know he was going to do it. So from our standpoint, it wasn't. And that's, you're going to see a lot of focus on that. And I think the CFTC will probably weigh in on that eventually.
A lot of nuance there to unpack. And we talked about, Jason, I want to get your insight on just the cyclical nature of all this that Robin described, because you've probably been building markets across a lot of cycles. So for people maybe whose products touch this world, how should they think about planning and managing, knowing that there is sort of a cyclical nature to some of this stuff in terms of regulation and user adoption?
Well, I think anytime you're holding customer funds, you have a duty of care to be responsible with their money. So even though we're in, you could argue the entertainment space, although I view us more as a financial technology company, Once you're holding client funds, you are a fiduciary and you should treat them with respect and you should have fairness and rules. And even if you don't have to, based on the letter of the law, I think the principle of fairness is really important. So what I would encourage everybody that wants to build in this space is to put yourself in the customer's shoes and try to do right by them in the first instance, and not just try to make a quick buck or try to have a clickbait that works on Twitter. And I think a lot of these markets are in poor taste, but with good taste, you can rewrite them to be less manipulatable or less dodgy. For example, it would be completely rational to have a market on the earnings of Coinbase, or are they going to launch a new initiative or something like that? But to have a market on what word a CEO is going to say during an earnings call, in my opinion, is silly and doesn't treat customers with fairness. So that's what I would encourage people to do, is to think thoughtfully about the number of markets that you create and the rules that you create around those markets.
What if customers want to be silly?
I don't think, well, I wouldn't do that in a regulated framework. I'd probably try to do that, with your friends, or I don't know. Maybe that's what crypto's for.
Well, it's ironic because the first contract is allowed by CFTC rules. The second one is not.
Yeah.
What's the second contract
Basing a contract
Okay.
on earnings,
Okay.
will earnings be X?
Yeah, it almost seems like what Brian Armstrong did was maybe poke a hole into, maybe people will be less interested in those types of prediction bets if they are so easily thrown off by whoever's reading the script. Michael, we've talked a little bit about sort of risks and watchouts, but I know a lot of savvy traders are looking at prediction markets data and increasingly it's helping inform their research, the way they're doing their charting. What are some ways you've heard from the trading community of how they're looking to some of the prediction markets data to make smarter decisions around their portfolio?
Yeah, there's no question that sentiment is kind of this really important data set that's kind of affected and implicated all, traders across the maturity curve from retail to institutional. So the beauty of, I guess, to borrow from the crypto ethos, the monetary energy behind the probabilities that are being created are gleaning some really impactful insights that are here to stay, and what facet and form it takes. But we kind of focus on creating a complete visual workflow, with quantifiable data, but also sentiment data. And it's interesting to see how social intelligence, how people are able to influence each other within this contained network on our platform. Engagement is highly correlated to having skin in the game.
Mm-hmm.
And that skin in the game is not always money. It can be influence. It can be, credibility. So we're seeing sentiment being used in ways that are kind of span beyond how they might otherwise be used in traditional capital markets investing. So
Yeah. Wild stuff. I mean, we got a couple minutes left. I really quickly want to, we've talked a lot about how you're all approaching this topic from different angles. I think a lot of people here are maybe building alongside or adjacent to this world. So I guess let's wrap up for each of you. What's the so what based on your expertise in the prediction markets, where you think it's going for people in fintech, whether they're building, investing? What is something you'd want the audience to go home with? I'll start with you, Robert.
Well, I think kind of coming back to what Michael was saying, it's how that data is being used and whatnot. I think so. For instance, I had a friend in Europe, trader friend, and he said, "So when's the shutdown going to end?" And so I simply went and took a picture of our contract trading on the shutdown on November 21st, 80%, sent it to him. Didn't have to say anything. I think that's going to become, that, and it always sort of has been on Wall Street, at least. That's the way people communicate in odds.
How about you, Robin?
That's the dream that I've had for 36 years now. The dream that we could just have a lot more consensus on a lot more topics generated by markets. And in the next few years, we're going to see more of that happening. And there's some parts of that I'm hopeful for, but it's a vast possible space, and watch that space.
Right. You must feel very validated of 36 years, and now it's like you're the star of the show. You're the guy.
Okay, yeah.
You're the coolest guy, George. I'm like, oh, we got the prediction market guy, George Mason. I know him. All right, Jason, how about you? Based on building here a while, what do you think people should take away from everything we discussed today?
Yeah, two quick things. I think you should use it as a tool to augment the news. So cutting through the noise in getting signal, whether it's an election or shutdown ending or anything like that. And the second thing is I really want to see prediction markets disrupt sports betting. For those of you that bet on sports, you're probably paying a 10+% margin every time you place a trade. Think about trading stocks. If you had to pay 10% every time you place a stock trade, you'd lose money very fast. And that's why sports betting companies make so much money, and prediction markets are the solution to that.
All right, Michael, final word over there. What do you want, knowledge do you want to drop before we send people to their next networking break?
Well, I'm bullish on prediction markets. I think in this kind of world of hyper ambiguity, I think adding real probabilistic modeling can help the average person kind of distill signal from the noise. I'll leave it at that.
All right. Thank you so much to our amazing panelists. Thank you to our audience.